Hello and welcome back to the channel. I'm Crypto Trend Trader. Today we're going to be taking a look at Fibonacci sequence and our Fibonacci retracement tool. Before we get started, I'd like to say that this is not financial advice. I'm not a financial advisor. I'm just giving you some insights on the market as well as some of the knowledge I've picked up in technical analysis over the years. Alright, that being said, if you're not familiar with Fibonacci, he was an Italian mathematician back in the Middle Ages, and he was thought to be way above his time. He basically recognized that there was reoccurring patterns throughout nature, and then was actually able to use these reoccurring patterns in mathematics. And in this case, what we're talking about is our Fibonacci retracement tool in this specific case. And what that is, if you look over here, we're in Tadingview right now. We're going to look over here on the left, and we'll see this tool right here is our Fibonacci retracement tool. You see it pops up there, and the way that works is you'll find a swing low point, and then you're going to find a swing high point. And when you anchor that, it's going to put these different levels up here. I already have it actually drawn, so I'm going to take that back off. The levels that I typically use are, you can see them here pretty clearly. If you want to make sure your tool is correct, I can actually show you how to do that. You can draw one out here, just wherever, and then double click on it, and then you can go through and adjust whatever you want to do. So I use the 0, the 0.236, 0.382, 0.5, 0.618, 0.786, the 1, the 1.618, 2.618. You don't have to use all those, but also very important is the 0.886. But you can go through and basically check these out, change yours however you want. You can alter whether or not the labels show up at all, or if they're on the left, right, etc. But just play around with it. The best thing to do until you get familiar with it. But anyway, so what we're going to be doing today, we're going to be looking at Bitcoin, and we're going to be basically drawing a few different Fibonacci retracements to essentially get an idea where price might react, with hopes that we can see where it's going to go here in the future, or potential area that it has been ranging in. So we're going to start down here with our first one, January 2015, and we're going to place it at the bottom point, and then we're going to take it all the way up to our next point here in December 2017, and that's going to give us our blue, in this case Fibonacci. Okay, and then next we're going to, from that same point, December 2017, we're going to take another fib, and we're going to draw it starting at the top point down to the bottom point from December of 2018. And in this case, that's going to give us our orange Fibonacci. And then from the bottom of that, where we just drew a December 2018, up to the top of June 2019, which is the peak so far of this rally that we're on currently. And finally, that's going to give you our green sequence here, okay? And you don't have to code them the same way. You can look off mine, or you can do your own. Just laying it out for you so you can have an idea where everything's coming from. So now we're going to go ahead and zoom in here, and now you can see the different levels, and it shows up on here and gives us an idea where we might see a reaction. And you'll notice that you often see it bouncing between these lines. And now granted, there's a lot of lines here, but you're looking for certain things. Like for instance, this heart line that came up gave us the perfect point here as where the downtrend right here, when we finally broke through this downtrend, we saw the capitulation move right here. So you'll see as we get deeper into this that they are very important, and that they're used by other traders, bots, market makers, to essentially move the market to these points where a lot of people can agree, hey, that's as high as it needs to go, or hey, that's as low as it needs to go before I'm interested. So alright, so we're going to see essentially when we ran up to 20,000 here back in December of 2017, basically topped out, and we started forming this triangle. And you can draw a triangle a lot of ways. You could draw it so it broke out back here and then kind of dance around. I'm drawing it obviously after it already played out, so I'm able to draw it more clearly. But you'll see we bounced around, and what happened is we were finding support consistently right here in the $6,000 range, and each time we were getting less of a reaction off of it. And typically what that means is that the support's getting weaker, and that we're slowly going to fall out. So we basically had this last attempt rally to try to break out. We actually broke out of the triangle at the time, but it was a failed rally, and then it came straight back down. And then you see we basically leveled out here, and that's when a lot of people knew, okay, this thing's getting ready to go down. And that's exactly what happened. We basically got to the edge of the triangle. We broke down, capitulated, and you'll see that I am in log scale, so the measure move down is going to look a lot smaller. I'm sorry, look a lot larger than the measure move up, and that's only because it's done in percentages. So the price to move up here versus the price to move down here is going to appear a lot larger in the scale. So when we did finally capitulate, you'll see, I'm going to turn this off for a second. What I have right now, we're on the daily scale, but it's essentially the 200-week simple moving average and 200-week exponential moving average, and then the 50-week. But because I'm on the daily scale, but I want them to show up how they are, I just multiply them by 7 days in a week. Okay, so you have the 350, 200, 200. I don't normally do that, but it just simplifies it for looking at a certain time scale when you want to see something from another time scale. So basically, you'll see we had reaction down here and found support, broke through on the 50, and then we went on a massive bull run. We never broke through it until the bull run was over. Okay, even back here when we tested it, we never broke it. Once we broke it, the bull run was over. And then we came back, we found ourselves underneath, and it started becoming resistance here. We tried to break through and couldn't even get through, and then that's when we got close and capitulated. When we dropped down, we saw almost no reaction off the 200, came back up and tested it. It was resistance, and then we basically just bounced between the two 200 moving averages. And a lot of people didn't see this because they were only using the one, but essentially what was happening is we were forming another triangle, and this time I have it in green, and again, it's easier in hindsight looking at it. The triangle actually looked kind of strange at the time because it was almost like an arc here, but what it was, we were putting in an Adam and Eve bottom. Alright, so what happened is we essentially started consolidating at the top of this triangle, and instead of just bouncing around, we were just hanging out here. And when you hang out, just like here at the support, when you hang out at a support too long, it breaks. And right here, we hung out at this resistance, hung out at the 200, and then bam, that's it. We saw our jump up, and that was essentially the start of the bull run. It was a $1,000 move in like an hour. I remember the exact moment it happened. So we came up here, and you'll see we found ourselves right at that 50-week moving average. We essentially came to it, stopped, sold off a little, and then we bounced around trying to fight it. And again, you consolidate at a resistance long enough, and you're going to break it. And that was it. We broke through, we ran up, and you'll start seeing as we ran up, we weren't finding resistance where a lot of people thought we were going to find resistance at some of these points here. What we were finding resistance at once we broke the moving average is we were coming up to the different fib levels. So you'll see we see different reactions at the fib levels, and often they'll correspond with the moving averages so we can get a better idea. And now you'll look, this triangle right here, a lot of people were saying back then we were going to go down to a 1800, 2000, 2500, and look, this is where they were getting these numbers from. They're not just making them up. It was 2400 would have been the 886 retracement of the entire move up here, okay? And it looks like it's not that much, but that's almost a 90% retracement. It's just skewed because it's in log scale. It looks like that because it's percentages rather than dollars. So regardless, okay, those people weren't crazy who thought it was going to dump down here. It's just we got the reaction to the upside instead, and there's a lot of reasons it might have happened. I mean, there was, in the end though, call it what you want to call it, there was more buyers than sellers. There was more people who felt like Bitcoin was underpriced than felt like it was overpriced, and so we got that big buying up, consolidated to 50, we shot through, and then you'll see we finally did come on up, and we reacted to some of these other fib levels along the way, but we finally came all the way up, we put in our high, and the way you can tell it's at least considered a swing high valid is you usually want to see it come to at least the 236. So when we're coming down, we want to see it bounce up to the 236. When we're going up and we put our swing, before we can invalidate it, we need it to at least come down to the 236. So we did. It came down to essentially the 382 almost immediately. But as soon as it validated here, you'll see we did get a little bounce off the 236. We overshot it, and then that was, everybody knew, okay, that's it. We busted through the 382, and then we come back down to the 382 of this wave. And then we got a reaction rally off of that, come up, and you'll see we came straight up to the 382, and then we broke through it, and actually, you'll see we came all the way up to the 618 of the downtrend. So when we hit that 618, we overshot it by a little bit. That was us putting in our top. That's essentially like a spring at the top. You know, this is where we should have stopped. Instead, you push the price a little higher, get people to FOMO in, thinking we're going to the next level, and then the sell-off happens and you get stuck. Well, not you, but someone did. So anyway, it comes back down. We get a reaction here. We get the reaction back up perfectly. We get a reaction back down. And you'll see we're jumping around between these two orange fib zones. And that was essentially our range, and has been our range now for the last few months. So if you drew that out, that's all it is. This is just our range that we're in.